Good afternoon, everybody, and thank you so much for being here today. So, as correctly pointed out, our topic today is on margin optimization, leverage that works for you. I think many of you must be aware that leverage has been a crucial tool and more recently become a conversation point throughout the industry, including evolving in towards conversation on how much leverage is used, whether it's being responsibly used, how it affects client retention, education, and also on how the regulatory jurisdictions are also changing their views on leverage. To explore those themes, I'm very pleased to be joined by two highly experienced voices from the industry. Please welcome Jason, IC Markets, and Fadi from Abouras Middle East. Gentlemen, thank you so much for joining us today, and thank you for your contributions. I think that this topic is very exciting considering the topical news and what's recently just happened within the financial market landscape, including themes such as gold price having the largest one-day drop since 1980, what's happened with silver, cryptocurrencies, and global risk assets as a whole. So what I'm going to do, I'm going to begin with my first question, and it's actually for both of you. If you could correct one misconception that the industry still has around leverage and margin, what would it be? And I will please start with you, Jason.
Thanks, Jameel. Look, I think one of the things that you often see, or misconceptions that you have, and it's interesting you start with industry, right? Do you mean industry from us as brokers and participants, from a client perspective, from a regulator's perspective?
I think it's everything.
And each of those perspectives is subtly different.
Yes.
I think we've seen the regulatory landscape change over time with more and more controls and restrictions coming in, mandatory leverage restrictions put on retail clients. That said, you're seeing moves from regulators like the FCA to redefine what a professional client is, which then opens up additional leverage to clients. From myself, I moved to Singapore in about 2009, and Singapore already had a very mandated leverage restriction regime back then. So, I've experienced building brokers and profitable businesses with limited leverage. What we tend to see is that clients know what they want, and regulators put in certain restrictions. Not only clients look at the opportunities to move to a lower or more leverage, less restricted environment, but then brokers have opened up those avenues through offshore regulators, etc. So I think the misconception probably comes more from the regulators about what clients actually would like to have. It's important from our perspective to make sure we educate and help them to use those leverage tools properly. But anytime there is a restriction, you tend to find clients finding ways around it.
Yes, and we're going to talk about client education in just a while. But Fadi, how about you? Any misconceptions that you see around leverage and margin?
Well, I mean, definitely it's quite ubiquitous across the broad financial services space, and specifically in our industry, because most clients and brokers, they use quite high leverage, especially on offshore jurisdictions. So we notice a very common misconception in terms of leverage, which is leverage being viewed as a strategy rather than a power tool. So what traders tend to do basically is, like, whenever they hear, oh yeah, I can use 1% margin, have a percent margin, okay, they jump on literally every opportunity in the market, which is, I mean, very erroneous from not only from a risk management perspective, but also from account management perspective. So, for example, what we do in our company, I don't want to sound like I'm marketing, but we place a lot of emphasis on, understanding all the dynamics of trading with a lot of emphasis specifically on leverage. So at the end of the day, leverage is a risk amplifier. It's not a skill. And the misconception, in other words, would be like chasing the Holy Grail through higher leverage.
I agree with both of you. And actually, that leads me to my next question, because we've already mentioned some of the changing regulatory aspects. And as we all know, over the past couple of years, we have seen regulations across multiple jurisdictions and areas of the world change their view or to reduce leverage. In your opinion, does these changing leverage ratios help improve client retention? And in your opinion, has it actually protected the interest of traders? And I will please start with you, Jason.
I think for a lot of these, you look at it, and it for very small accounts, possibly.
Okay.
When you look at headline rates, nowadays most brokers are offering tiered margining. So as you build up an exposure, your leverage decreases. And so when you get larger accounts, even on a less leverage starting rate, by the time they build up a position, the aggregate is about the same.
Yeah.
And that's because leverage is, needs to be looked at in two ways. As a broker, you're loaning the rest of the exposure to the client,
Yes.
and you're managing your risk from that client. So if they're building up a very single asset or single position exposure, then you need to protect yourself as well as the client. And I think that's also a misconception with leverage. It's protecting both parties.
How it also affects the brokerage house. Fadi, do you have anything to add?
Well, not only I agree with what Jason just said, but I would like to also add a very subtle nuance. So everything, and I mean, when you have a business which is client-centric, everything is about client longevity, right? So, I mean, the longer the client survives, especially in volatility times, such as the recent ones in the precious metals market, the more value is created for your company. So ultimately, anyone should look at the lifetime value of any client, not only from a dollar term or from currency term, but more importantly from time term, because this is where you decrease your churning rate and you increase your conversion rate.
Thank you.
I was just going to add, when we look at client outcomes as a sort of reference, the leverage element is always sort of identified, but actually cost is also important. That erodes capital from a client account. So higher commissions, higher spreads, high overnight charges, all of these also play an element into that sort of client outcome. So leverage plays one element of that, but there's a number of other factors within your offering that also, determine what that client outcome looks like.
I agree. Leverage is very complex and it impacts both the brokerage and the customer, as you pointed out. Let's talk a little bit more about client behavior and also about the recent round of market volatility. And my next question, please, Jason, is for you. Can you tell us any further about patterns in client behavior based on leverage available to customers and how that might have changed during the recent round of market volatility, specifically in precious metals?
So we don't necessarily look at things from that leverage basis frequently. We have multiple offerings in different jurisdictions, so different leverage requirements from the different regulators. There wasn't necessarily a discernible difference in client behavior from any one of those jurisdictions when it comes to particularly looking at sort of that precious metals move in the last week of January. I think like most brokers, the interest in sort of trading gold and riding up the rally over the last 6 months of last year and into January, was seen. There was large general exposures taken by clients. In that week, we traded about $500 billion US notional value across US dollars, across gold and precious metals. But that was not massively elevated from what we would expect in a normal week. Maybe about 20% up volume-wise. I looked into some of the sort of statistics that we saw. Clients probably manage their exposures better than you would think. So we processed that week across the precious metal offering 11 million trades, individual trades, not talking about volume. And about 1.5 million of that was on stop order. So that's the client choosing to control their risk or positions by leaving orders on the platform. So, more than, well, let's call it, around 15% of orders were clients determining to close their positions at a given price rather than being on a margin call or us having to intervene as a broker. If we look at active clients across the week, again, ballpark figure for us globally was around 90,000 active clients. And of those, about 1,700 were closed out on margin. So it's a very small percentage. To me, that means clients were in control. They were managing their accounts quite well.
Thank you so much for those insights and that transparency behind your volumes as well and those metrics. Fadi, my next question is please for you. In your experience in the industry, including in periods of high market volatility, do investors naturally reduce leverage over time, or do they in fact increase leverage as they are motivated to trade more?
Well, for the first part, there is no simple yes or no answer to that. So basically, every client, depending on their level, depending on their strategy and their mindset, they have different approaches. So from what we have seen, for example, being a regulated entity and we have highly restrictive kind of rules. For example, some professional traders who basically qualify as professional traders, where you have to have at least a $1 million in terms of financial liquid assets, and you have to have at least 12 months experience, extensive experience. They opt for a retail category. And that often surprised me, but when you look at it, I mean, aside from, having the higher level of protection as being classified as a retail, but specifically the leverage cap, this is where, this is basically key for advanced traders. They choose lower leverage because this is what determines, the path forward for them, and this is how they can weather volatile times like the recent ones. On the other side, we also witness, which is the vast majority of clients, like I said earlier, they immediately jump on every opportunity with high leverage, and those who are being wiped out of the market. So again, going one step back, in terms of longevity, so when you have a lower leverage, your survivability rate is much higher.
Thank you, Fadi, for those insights. And I think you highlighted a very key point. Every client has their own individual needs, and leverage is also just one of those tools available. Thank you, gentlemen, for that. Jason, my next question is also for you. How do clients manage their positions aside from broker intervention or what is mandated leverage? And does high leverage, could it lead to negative balance from being over leveraged, or did your firm see this during the recent round of volatility?
So I touched on it before in terms of the order management, placing stops and managing their risk exposure that way. When it came to negative balance protection, we offer that as a broker across our piece. Again, some of that is regulatory mandated and other times not. again, digging into what happened in the last week in particular, last week of January in particular, it was a very small number of clients that sort of went into negative balance, maybe about 600 accounts for us. And I think negative balances were around $150,000.
Okay.
Which, when you average it per account, is not a large number per client. I think managing your account through orders, if I go back to that sort of Singapore experience as well, but back then in the regulations, and they may have changed since, but they were specifically written to include things like guaranteed stops. So where the broker guarantees your stop level to you, there's no risk of slippage. And because of that, you were able to actually almost bypass the leverage restrictions, because if you put on a very tight stop in a large order size, actually your exposure and your theoretical margin would have been much higher. So there are tools that brokers provide. There's strategies that clients employ to use the options that they have. The other thing you've seen, which is more in even in the future space versus, say, the OTC derivative space, intraday margins being more flexible. So when a client is trading intraday, they may trade at higher leverage, and by the end of day, they need to be posting the sort of exchange requirements where it comes to maintenance margin, but more flexibility for that intraday session. We do something similar on the stocks that we offer as CFDs that trade 24 or 23.5, so the extended session US stocks. So I think you'll start to see more sophistication coming in, looking at market timings, market events, liquidity. So that changing dynamic means I think the tools on offer to clients will keep changing as well.
Okay, thank you, Jason. Thank you for those insights. I think we should also talk a little bit further about client education, something that has become very important as a result of the changes to leverage by regulatory bodies over recent years. And my next question is for both of you. We have seen brokers make continued efforts towards investing in client education. But can client education generally change the behavior towards leverage, or do emotional decisions or high periods of market volatility still dominate investor decisions?
All right, I'm going to pick it up, this one. Well, education is extremely important, but the distinction in terms of leverage is education increases awareness and knowledge, right? But it doesn't influence behavior. So this is where traders and brokers, we as a company, for example, we have the AvaTrade Academy, where we provide education for beginners, intermediates, and advanced traders. Part of our training courses, we try to educate our audience on how they can work on their psychology, because this is really the main driver behind the trading decision making. We always see traders, learning everything from A to Z, spending time educating themselves about different strategies, disciplines, whatever it is, technicals, fundamentals, all the macro dynamics driving the markets. But in the real world, when there is heightened volatility in the market, there's a lot of choppiness, parabolic moves, and stuff like that. Immediately, the behavior overrides the knowledge. So this is where we can't emphasize enough, for traders to try to master their behavior and their psychology.
Thank you so much for those insights, Fadi.
Look, it kind of amuses me because even if we take it outside of trading, right, it's put it in the office place, put it at home with family. You always going to get emotional situations, and I know for myself, you don't always behave in the way that you think you should behave or you would like to think you should behave.
But the public speaking is good, guys, okay?
Everybody can relate.
But so everyone knows, I think trading decisions often are made on convictions or thought processes and decision-making processes that you believe in. So that's why a lot of traders will say, right, did I make the right decision? Do I have conviction in that? Okay, market's gone against me, average in, right? And maybe that's not the right call. I think education's important in that, but again, really taking the emotion out of it, we're moving more towards automation. Maybe even adding in a discussion around sort of AI tools that can help curate your portfolio or make those trading decisions for you. And so I think education offerings are important, but it's also the ancillary tools and, whether they're designed by yourself or by partners that can add to that decision-making process, allow clients to evaluate. Obviously on Meta, you've got a lot of EA strategies that people can buy into or use. So I think if you're following that type of approach where everything's a little bit more automated, then you're removing some of the emotion out of it. If, like when I trade, I tend to sit and click myself, I can't remove the emotion, right? So
we are all human. And I think that ultimately, during periods of high market volatility, I think that tool of leverage will always motivate traders to trade more regardless. And let's briefly now touch a bit more upon the tighter regulatory platforms that have been put in place. And my question for both of you actually is, does the tighter regulation on leverage, does it encourage longer-term trust in the industry, or has it pushed clients to offshore jurisdictions and created new trading hubs for the industry? And if you don't mind, I will start with Fadi.
Sure. Well, if there is one thing that we value the most is regulation. By definition and design, regulators, design frameworks and rules to maintain the market integrity and efficiency and to secure all market participants' interests. However, this is really like a double-edged sword, for the very reason you just mentioned, which is maintaining clients onshore versus pushing clients offshore. And I think that comes down to one key thing, which is the investors and traders' investment objectives. So on the advanced and professional side of clients, for example, they tend to value regulation and maintain their onshore position because they understand that lower leverage equals de-risking, equals longevity, and they have more opportunities to participate in the markets. On the flip side, those retail traders who erroneously look at things from the lens of the leverage, that this is an opportunity for them to make more money. With a short movement in the market, they get wiped out. And we have seen that multiple times. We see that on a day-to-day basis. So ultimately, I think, the most ideal environment is where there is a balance between maintaining, the regulatory standards in terms of leverage, for example, and at the same time creating, some kind of structure where they can entertain both sides of the business, whether retail or professional clients.
Thank you so much for those insights, Fadi. Jason?
So has it created new regulatory hubs? Yeah, for sure. When you look at many different brokers here today, you'll see some have one regulatory license, some have many. you don't have to, if you're a global firm, you don't have to go to the lowest common denominator on each of the licenses. So you can still operate with the same regulatory rigor that you would in what people would sort of term tier one regulations, even for your entities that are elsewhere. And that's the approach that IC takes, is to uphold that level no matter which entity you're facing. I think it's when you look at potentially some of the smaller firms who only may participate in one regulatory environment
with higher leverage,
that you might see subtly different behaviors to that. But, like we said before, clients actually quite like to have the choice. We get asked at times, can I access higher leverage? So, being allowed or giving clients those opportunities and choices is important.
Thank you so much, gentlemen. And actually, our timer is a little bit delayed here. We have time for maybe just one more question. And I just want to briefly look ahead into the future. How do you think the conversation around leverage might change in a couple of years from now? And that question is for either of you.
All right. That's a very interesting one, by the way. If you look at the current landscape in the UAE, for example, and I hope I'm not stepping outside, my authority, but it's very intriguing. We have three main regulators. We have the DFSA, FSRA in Abu Dhabi, DFSA in Dubai, and we have SCA in the mainland.
CMA.
Have they changed already? All right, I didn't know. I thought they were still in the process. So we have CMA. They're trying to make that uniform across different jurisdictions, which is a good thing. Anyway, coming back to the point, in both DIFC and ADGM, we have very restrictive leverage for retail clients, which is up to 1:30. That varies depending on the asset class. But when you look at the SCA, where you find brokers, and by the way, where the majority of brokers are regulated by the SCA or CMA, sorry. So, you say crazy leverages, which is, it could go up to 1 to 500, which is in my view is outrageous. It's like. So my hope, and I think this would be coming, all regulators will have to align eventually, right, in order to maintain a uniform market practices and investment environment in the UAE.
Look, I think that's very true in the UAE, particularly having that kind of mix in a relatively small space is almost regulatory arbitrage in your own country is difficult to understand. That said, most CMA regulated brokers are Cat 5, and they're passing their clients offshore to even higher leverage than the 1 to 500. When you look at numbers in the industry, whether it's client acquisition numbers, trading volume numbers, the brokers that have grown the most since ESMA are the ones that are offering access to higher and higher leverage. It comes back to the point that I've made before. Clients seek it out sometimes. They're looking for that opportunity. Again, as clients build up larger positions, most brokers now ignore that headline rate. The headline rate is a marketing tool. In reality, you might get a very small position on your account with that 1 to 1,000, 1 to 2,000, 3,000, some are higher. So in reality, I think there is an absolute want from clients for that type of business. You're seeing crypto firms open as brokers, prop firms open as brokers, brokers open as prop firms, brokers open as crypto.
And Revolut.
And there's a broadening out of the product set and the retail client base happening. And that's not only in leverage and new assets. You're seeing it with expansion of brokerages in the US and globally. There's an appetite for retail trading. So I think the leverage discussion will slowly dissipate a little bit as people understand that retail investors are getting more mature, getting more savvy. And I think it will come back to price, execution, size, all the things we're good at.
Guys, thank you so much for your contributions today, and I hope that the audience enjoyed this discussion. We did just conclude our final topic on the subject of margin optimization, leverage that works for you. I would like to thank Jason from IC Markets for his contribution, and also thank Fadi for his contribution as well. That's Fadi from Abouras Middle East. Guys, thank you so much for having us, and enjoy the rest of your events.
Thank you.